Hey folks, and welcome to the Pipnotic Symposium for the 27th of November 2019. Apologies for not getting anything done yesterday. We were still in Singapore and kind of running around and stuff, so didn't get much done yesterday. I managed to see a bit of Singapore, which was pretty cool, I think. Very different than Bali. I must say, if I had to choose, I think I would live in Bali and have weekend trips to Singapore now and again. But it was nice. It's cool to be there. I think it's just a nice, well-functioning infrastructure. Everything works. The parks are lovely. It's very clean. Yeah, stuff like that. You want to buy new underwear? You can you can get good underwear in Singapore. Yeah, so it was a nice break from the jungle life. But today is the Q&A, and Awesome Trader posted in the requests channel that he wants to see a little bit more of an explanation as to how we would go about doing kind of the buy side and the left side, buy side and the sell side. So here we have the buy side, and here we have, find the red, the sell side. And the reason this is the buy and this is the sell side is because this is where price is moving down and this is where price is moving up. And the way you find that is you look for a very clear major swing. Okay, so if you're trading on the smaller time frames, well, then your major swing should probably be, let's say, around the daily chart. So here we have a major high, here we have a major low. Okay, so prices move back down here and we're wriggling higher. Okay, and so you want to mark from the highest high in this swing, this is like the major high, to the lowest low, and this is the low. From here to here is the sell zone, or the sell side, and from the low to the opposing side of the market, the origin of this move is the buy side. So here we're buying at demand, and here we're selling at supply. Okay, so if we have a look at that, well, the next question would be, well, which one do you know which to sell at? Well, as price is moving down, you can see that these areas of supply are going to be formed by the software, and you want to be paying attention to those because price left, price tested it, and then we went down. So this, the high of this candle just here, becomes the beginning of the sell zone. So we don't want to be selling at a price any cheaper than the high of this pullback. Okay, and so the cool thing about this is that it enables you to focus on the major swings. Here we had a really nice push lower. We had the slingshot was pulled back, then it went down. This is pulling to the edge of the sell zone. Okay, price reached it. We had a nice, about maybe a 1 to 2 risk reward. Price moved to the opposing side. Here, this demand. And now we're on the buy side, as you can see, and now price is drifting higher. So then you ask yourself the question, well, where do I go then? When you find the area, the new area of, the new sell zone. And the sell zone, because price has already been back here to this area, one time, two times, you don't expect price to hold there. And then also, this is really, really important. This is that, let's say you find something really yummy in here. Okay, do you sell here? No, you don't. Why? Because the box is green and this says that we can only buy. And so selling here would not be a good idea because price has already been to this price level here and here. Okay, so we want to look at supply in this side, in this leg, and demand in this leg. Okay, so we're only selling at supply here and we're only buying at demand here. So if we have a look, well, price came back to this area here, here. So the beginning of the sell zone would be where? It would be here. Okay, and this is interesting because price came down, we formed this area of supply. This is beautiful. The slingshot was pulled back and then we cut away. Okay, so the beginning of the sell zone, it must be higher, it must be above these kind of these slingshot pullbacks, and it must be an area of supply in this red box that price has not retraced to. And price has retraced to this area here, but it has not been above yet. Okay, so expect price to move to an area such as this, and then such as this, essentially. Okay, and price has not been back to this price area here, so we expect price to have a bounce there. I'm not selling here, I'm selling it here, because this is just a nice pattern. We have a rally, sideways price movement, and then left, accumulation, left, drop. And so this is just a nice area here that I think we could expect price to have a bit of a bounce at. Notice also that we had an area here. It was tested by this one, so this tells us we have a parent-child relationship, and so you can either move your entry up to here, or you can put your entry at the child and put your stop above the parent, as I've done. Okay, so that's how we do it. And so the cool thing about this is that knowing that you're selling on this side and you're buying on this side, and you can go to the smaller time frames and just look to buy, because you know that, okay, if you want, you can mark off the low. So this one here, let's fatten it up a little. We know if you go to smaller time frames, we're allowed to buy. We can buy because we're on the right side of this line. So this is buying territory. So now you look for areas of demand that are lined up, that look nice, fresh, untested, and you can do the same thing over here. Okay, so on this little price nodule, we had the sell area, so marked from the high to the low. This is the lowest low here, and then we do another one, the green one, which is from the high to where price currently is. Okay, so price formed this, it went up. That means you're allowed to sell. You're allowed to sell at supply, and you're allowed to buy at demand. So you buy here or here. There's nothing else in here. Or if you want to sell, you're allowed to, but you have to do it here. This is a nice area. That's not drawn correctly, like that. And then we have this one up here. Okay, which price has not been to that yet. And so we have selling, we have buying, we have demand, fresh, demand, fresh. This is no longer fresh. This one's gone. So we're not allowed to take this one, but we are allowed to take this one here, because since it was established, there's black space. Okay, and this is the one, the slingshot was pulled back and it left. So from here, from here and down is the beginning of the sell zone. Okay, this is a really nice area down here as well. Oops, oh, that was dreadful. Let me try that again. Color green. So if we go like that, that's a really nice area. I like that, how price came down, rallied, accumulated, rallied. Price tested it, and we left. Okay, and so the reason this is interesting is because price tested here, so we can expect price to go higher from here. That means you don't want to be selling these micro areas of supply here or here, because it's against the odds. Why? Because we fed into this. So if you want to sell, then you have to look at the leg and down to here. Okay, and there's nothing really to do. This has been tested, this is gone. Price went deeper, went further into this area here, which brings our attention to this one here. We bounced at this area here, and then above that we have black space since the departure from this area here. So this is where our next area to sell would be, and our area to buy would be down here. Okay, because this is just a nice rally, accumulation rally. You see black space since it was established, and price has not been back there since. This is on the 1 hour chart. Go to the weekly, and things might look quite different. Let me turn everything off. Okay, so we have that. That didn't work well, did it? Let's try again. Turn here, false. Okay, so now we go like that, and if we look here, we had a high, low, lower high, lower low. So if we zoom in, you want to be looking at the major swings. So for the major swings, we have one, we have a major high, we have a major low. Okay, so our buy zone would be from here up to the high, which is about there, and the sell zone would be from the high to down here. What does that mean? Well, that means that we are not trying to sell any supply that is formed in here on the smaller time frames or this time frame. We're always going to look at the leg down. So sells are only allowed to happen on this leg, and buys are allowed to happen on this leg. Okay, there's no selling allowed on this side here because this is price just moving higher, probably to, who knows, something up here. Okay, and so we can see we have a nice area of demand right there, supply rather. We had this one formed here, price came to it. What does that mean? Well, when that happens, I mean the beginning of the sell zone just goes higher. First we had this one here, then price fit into it, we went here, so we move it higher here, the price went deeper here, and now our attention is brought to this area just here, which is where we're probably going to have a bit of a bounce. Okay, just a nice area. So what we do now is you can take the software, we can mark it off like that, update, good, so we want to be selling around there, and then you go in here and you look for areas that you want to sell at. There's not a lot of clarity there. We can see that rally, sideways price, and then drop, distribution drop. So go to the small time frame again and see if we can find it a little bit more clarity. Okay, and there's, you can see, first of all, let's mark off where price is, where it's been back to. There, it's been deeper, it's here. So this is the cheapest we're allowed to sell. And I had this marked off last week, and I still might have a look at that because I like how price went up sideways and then down. But on the bigger time frames, you can see how price kind of went down, went up, went down, sideways, and then down. And so I think that price is probably going to have a bit of a pull up into maybe towards the highs of this area here. When we look on the weekly, you can see very clearly that, let me remove all these, that we have price left, move sideways, slingshot was pulled back, we left, we didn't really do anything, but we did manage to pull the candle, the slingshot, all the way back to here before we left. So you mark off the high of the candle to the left. The body of this candle is in range of the previous, body of this is in range of the previous. Okay, so these are all linked together, so we go from here to here. So ideally, we have a trade that looks like that, and we have a look on the daily, and it looks like this. And this is pretty cool, isn't it? Because this is where the slingshots pull back to and then departure. Currently, the beginning of the sell zone is here. Price went into it, it's in here. We're not allowed to sell here. We're not allowed to sell in any of this stuff. Okay, and it's not selling because price is wriggling higher. Why? Because it's working its way through the supply in this leg down here. So only selling supply in this area here. So price went up to here, and I think the price is probably going to have a bounce at around the 110-ish area on the American dollar, Japanese yen for these reasons. Okay, let's do another one. Default. Let's have a look at this. So what do we have here? Well, on this one, the big time frame, I'm just going to go like this, make ourselves work. Just need the clear swing. So where's the major swing? We have a major high and a major low. Okay. So we have price that went from here to here, and then it went down again. What does that mean? Well, that means this is the cheapest we're going to sell for, because price has already been back to this level. So price is probably going to move above here before it starts to attract selling. And this is why my entry went above that level. So looking at this, you can say, okay, cool, well, where would the sell area be? We mark from the high to the low, which is here. So we're selling in this leg, and we're buying from the low up to the high here. There's plenty of areas to buy at. And the cool thing about this is that when price went up here and went down here, we still knew that we were buying. Even when price came down to here, we knew that we would still be buying because we've done this. We've marked off the charts like this. So we're selling in price levels located in this leg, supply, and we're buying at demand in this area here. Okay, and so we can see here we had, when price went up, it came down, so we had a beginning of a buy zone here. Price didn't quite get there, but it did manage to feed into it in this candle here. We moved beyond that point into this area of demand, and this is where price turned around and started moving higher. So we still know that we're buying. Okay, and marking it off like this is just a really good idea. So if we mark this off, let's go like, mark this off, I like that one there. Actually, we don't have the indicator marked off, do we? It's not enabled. So we go like that. You can see here that in price formed this daily candle, it left, slingshot was pulled back, and then we dropped away. Okay, so ideally we should be going like this. Okay, so this would be an interesting area for us to sell. As a matter of fact, I'm just going to put, enable this so we can do it properly. So from here to here, and actually the reason I put it here is because we have the big figure, the 13400. So I think price is probably going to have a bit of a punch there. So let's put that on. Selling 13400. Let me enable my stop utility. The stops will go above this high. Okay, and the target will be where there's fresh demand. And look at this. You can see we have a low, have a high, and price went down to here. So once price goes up here, we have a buy zone from here to here, and we have a sell zone from here to there. So we're allowed to sell in here, and we're allowed to buy lower. And so getting off this trade might happen right around here, for example. Price rallied, slingshot was pulled back, and then we're released. So if price manages to turn around here, this could be a good target. Notice though that the slingshot has been pulled back and then has released. So I don't think the price is going to leave here and then move all the way down there. Okay, so you kind of have to like keep these things in your attention. This is probably like a shorter trade, but I do like this pattern, which is why I used it. Let's have a look at this one, or let's find something. I don't have any trades. Okay, so we have our high, we have our low, low to the high. We're not allowed to sell any price levels here, we're only allowed to sell here. We found this area of supply, which I like, and to buy, we had this one here. Price bounced almost, now price is kind of moving back into this one here after reacting this one here. Okay, so this is a valid area to sell. The software told us it was there months ago. This rectangle was drawn on the chart months ago. Price goes up to it and then turns around. Okay, so just doing it this way just kind of makes it clear where you should be buying and when you should be selling, especially if you go into the smaller time frames, because when you come here you know that you want to be buying, so you want to be looking for demand. Okay, go here, you can see that we still have, this was a nice area here. Price popped up, we moved into it, we moved high, and then we're kind of wriggling it away. Where do we have fresh areas? Well, we don't really have a whole lot. We have this one, which is okay here. we have something in here which I can't really see. We have this here. The price has traded a lot in that area, so I'd be inclined to move to a smaller time frame. You don't really have anything else until we get down here. Okay, so I wouldn't do anything there. Might have a little bit of a bounce here, the 169.32, and down here the 159.30 here. That's a, or a one, maybe a little lower, 159, 20-ish area. So that's all we have there. We have this area of supply. This is in the sell leg, this is in the buy leg. So buying on this leg and selling on the other one. Okay. Good. Well, I'm gonna leave it at that. I hope this clarifies this. If not, let me know and I'll have another go. Thanks for watching.